Hello, my name is Troy Epperson, and this is my website, oneononetrading.com. I've been doing trading and educating for many, many years, and if you're that guy that are almost break even, you're break even, you can't quite get over the line into profitability, maybe you could use a couple of hours of coaching that will really help maybe focus you and get you on your path to success. If so, please check out my website, oneononetrading.com, and I hope you enjoy the morning brief. Hey, good morning and welcome to the morning brief. Today is Tuesday, April 18th. You can see here by the news from forexfactory.com that there are a couple of U.S. numbers, but they are yellow, which means low impact building permits and housing starts. So building permits, very important because it's a leading indicator. It tells you, hey, somebody has gone and bought a permit so they can build a house. That is good, but it is not perfect because obviously sometimes you get a building permit and then the deal falls through. But so while it is a good number to be aware of, it's not super solid. The housing starts, on the other hand, means that they have now invested really invested some money, the builder has, to get the house started. So the foundation, maybe some site work, foundation work, stuff started. And once that ball is rolling, so starts are very important. Now, starts are very weather dependent. When the weather's good, starts are up. When weather's bad, starts are down. So you can see that these two numbers are completely different and have different reasons why they expand or contract. So it's important to know that because housing is a huge deal. I don't think this should be actually yellow. I think it should be orange because housing develops the local economy. A lot of labor comes to the local economy, as well as the big ticket items, like appliances. Well, the appliances are not made in East Alabama. They're made in, Wisconsin, wherever. So there's a lot of bigger impacts to be seen with housing nationwide as well as on local levels. So very important to pay attention to. I always watch these. That being said, what else we have the rest of the day? We have FOMC member Bowman speaking at 1 p.m. Yellow item, nothing to write home about. Not a lot of news today. Looking at charts, well, we are gapping up. Why? Who knows? Who knows? No reason to gap up that I can see. This chart is very bullish chart. Look, I've highlighted a couple of horizontal lines where some levels are. So we've got a high back here from February around 42.03. Another level at 42.21, and of course that swing high at 42.41. Those are going to be pivotal numbers going forward. So I'd be watching at least now. Obviously, you're not going to reach those in a single day, but certainly could meet one or two in a single day, and I'd be watching for those. On the downside does not look very promising if you're a bear. But 41.56 would be within reach. Below that, it could get a little nasty, but you're coming back into this band of consolidation. And so there's limited downside risk at this point in time. If we could somehow get below 4,100, then we've got, then there's some serious lack of support on the way down. But at this point in time, it's definitely looking like we are moving to the upside. Taking a look at the inventory. So, get out of here. The inventory, I drew the lines on it. We had price going up, and we actually had inventory declining. We have inventory declining, which is divergence. So, how do we... Divergence just means the market's not doing what you expect it to. Price went up, inventory should go up. When it doesn't, usually it means something's not quite right. I actually think what we've got here is the beginning of profit taking. So, based on the daily chart, here we're up again today. It would not surprise me to see inventory retract even today as well, just to see some profit taking. Because if we go back to that previous chart, you can see we've had several. Going back to the daily chart here, we've had several days. I mean, we were just going up. we were just at 4110. Just, we're up almost 100 S&P points. And I think that that's what's going on here is we're seeing a little bit of profit taking in the inventory chart. That being said, let's take a look at the intraday. Intraday, what do we got for our intraday levels? We've got some levels of resistance around 4208, more resistance around 4225, and some around, I'm actually going to say 4248 on the top side. On the downside, lots and lots of spots on the downside. Let's go with this first level, 4176, 4158, 4147, 4140. There's lots of support intraday right at this particular moment in the market. Stock Trader's Almanac for today is 61.9, so a 60.19% chance the market will go up today based on historical averages. So that is the skinny on today. Hope you guys have a great day. Remember to subscribe and like. Have a great one. See ya.